Hello everyone, today a very cautionary tale all about making sure you get the paperwork right and what can happen if it goes wrong. So let's consider the following scenario. We have Mr. A. Now Mr. A is a farmer and he runs his farming activities through A Limited. And Mr. B is an expert in solar panel technology. So Mr. B comes along to Mr. A and says, I've got a great idea. Why don't we go in business together, and those few hectares of your farm, we'll turn it into a solar farm and we'll install banks and rows of solar panels, and we'll make a few quid selling the solar energy to the national grid or whoever. So let's go to business together. What do you say? Mr. A says, yeah, sounds like a good idea. Got a few spare fields over there. That will make an ideal site for the solar farm within my larger farm. Let's do it. And then they agree that how they're going to do it is they're going to set up like a joint venture company. So they set up AB Limited. Both guys, A and B, are director shareholders. So the plan being that Mr. B provides the expertise and he will drive the planning application to try and get the planning permission to build this solar farm. The land will be on Mr. A's land, which is owned in A Limited. Now what will happen is that AB will lease the land from A Limited, from Farmer A, and that the operation will be, even though it's on his land, it'll be in a separate limited company, AB Limited, and then they'll exploit it thereon and get a yield from that and hopefully flog it for a decent whack in a few years' time. That's the plan. Right, so far so good. But it costs a lot of money to get a planning application for something like this. So in terms of the seed money, if you will, what happens is that Farmer A says, you know what? I will lend from my company. I will lend £500,000 into our newly formed joint venture, 500 grand going in from A to AB Limited, and we'll use that to fund the planning process driven by Mr. B because he's got all the expertise. So that's what happened. But then a couple of years later, these guys got a bit slapdash with their accounting obligations and basically forgot or didn't want to, or for some reason didn't file their accounts in AB, and the company got struck off at Companies House. AB Limited gone. So trying to make the best of a bad situation, Farmer A says, aha, okay, well, I lent 500 grand from my company to our new joint venture. Surely I can write that off in the accounts of A Limited. I just write it off because it was a loan and it's an irrecoverable loan, and the accounting rules say that if you made a loan that you're never going to get back, you can write it off in your profit and loss account the year that it becomes irrecoverable, which will obviously save a few quid in tax as well, because it's a deduction in your profit and loss account, reduces your taxable profits, reduces the corporation tax. Okay. And that's what he did. HMRC opened up an inquiry into the whole thing and said, no, we're going to deny you the tax write-off. Why? This is what they said. They said, to all intents and purposes, there was no loan between Company A and AB Limited. What actually happened was there was a repayment of a director's loan from A Limited to Mr. A, because his director's loan account was in credit to start with. Then that tripped over into being an overdrawn director's loan account. But nevertheless, 500 grand to Mr. A, and then Mr. A lent 500 grand into the new JV Co. AB Limited. So not from company to company. HMRC said, in reality, loan to Mr. A, then Mr. A lent in as an individual to AB Limited. So there was no loan relationship between Company A and Company B. Company A and AB Limited. And this whole thing went to the tax tribunals. Now, what did the tax tribunals say? They looked at this and they said, first of all, on the point of HMRC, we'll take the second point first, saying that really what happened was loan from A Limited to Mr. A to repay his director's loan account and then go over to being overdrawn, and then he lent the money into AB. They said, no, that's not really what happened at all. It was, in the tribunal's opinion, a transaction between the companies. Not this here. That didn't happen. What happened was straight across, boom, 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 to there. That's what happened. Thankfully, doing that means that his personal director's loan account did not go overdrawn, because when a director's loan account goes overdrawn, there are tax implications. HMRC said we want a third of that amount that you went overdrawn by in what we call advanced tax. When a director goes overdrawn in his loan account, if it's not repaid within 9 months, the company has to pay. In this case, this company would have to pay a third of the balance, and then when the director repays the loan, HMRC repay the amount. I've done separate videos on this and how you can avoid that by declaring dividends or whatever. But anyway, the assertion by HMRC was that was in play. Thankfully, the tribunal said no, it wasn't. So there is no tax charge to be levied by HMRC on an overdrawn loan account. Good. However, remember the original assertion of what Mr. A and A Limited wanted was to write off that loan account, that loan from A Limited to AB Limited. Now that loan was £500,000. If that had been written off and tax relievable, that would save £100,000 of corporation tax. Simple. In the accounts, debit profit and loss account, credit the loans, because it was a loan amount due back from AB, sat as a debtor in the balance sheet. Now we're writing it off, so we just credit the debtor, debit the P&L, nice big hit to the profit and loss, £500,000, knocks £100,000 off your tax bill. Great. But the tribunal said no. Even though we agree that it was a transaction from company to company and not via individual A, money's back to him, then him loaning, even though the tax tribunal said we agree it's from there to there, the formalities were nevertheless put in place for it to be a proper loan. For it to be a proper loan and follow what we call the loan relationship rules in the tax world, which basically means you get your write-off when it goes sour. There had to be proper loan documents in place. And when they searched through all the evidence at the tribunal, it was an informal arrangement. £500,000 straight across from that company to that company. Yes, that happened. You follow it in the bank account, but there was no loan documentation. It was just, this is what we intended to do. I was going to lend this. So the tax tribunal had no choice but to deny the corporation tax relief on a £500,000 write-down in A Limited when this thing went under, because the loan documentation wasn't in place. So a salutary tale here, for goodness sake, on any kind of business transaction, get the documentation right. Particularly in the tax world, get the paperwork right. Because in this scenario, a simple 1-page or 2-page loan agreement, they could have done it themselves. Yes, you might have advised them to get a lawyer, spend a few grand, but even doing it themselves, a couple of pages, downloading a template from the internet on what is a loan document would have sufficed, and they would have got £100,000 reduction in the tax bill, Mr. A. But he didn't. He was denied that tax write-off. So yes, in the accounts, that's what happened. It did indeed get written off in the accounts, but from a corporation tax point of view, it was added back so that he did not get the tax relief on that £500,000 write-off. So, tip for the day, get your paperwork in order, because if you don't, you could be denied £100,000 of tax relief, as this guy was. So, do think about it. Paperwork. It's not, everyone hates paperwork, but often these things, it's not war and peace. You're not having to write, a 50-page agreement. This is going to be just a couple of pages to say, this company agrees to lend money to this, repayable at such and such date, non-interest bearing, whatever. It would take 5 minutes. but it cost them 100 grand. So that is the takeaway for today. Get the paperwork right. So if you like this video, please do subscribe right about there. And as always, I will see you soon.